Ladies and gentlemen, good day and welcome to DLF Limited's Q3 FY25 earnings conference call. We have with us today on the call Mr. Ashok Tyagi, Managing Director, DLF Limited, Mr. Sriram Khattar, Vice Chairman and Managing Director, Rental Business, Mr. Akash Ohri, Joint Managing Director and Chief Business Officer, and Mr. Badal Bagri, Group CFO, DLF Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ashok Tyagi. Thank you, and over to you, sir.
Thank you. Good afternoon, everybody. Welcome to the DLF Limited Q3 analyst call. As you must have seen the presentation by now, we've had a pretty solid last quarter on both the development and the rental businesses. I mean, Dahlias obviously was the prime highlight of the last quarter, and I think we did a sales of almost 11,800 plus crores. You must have seen the cash flows for the quarter are also extremely healthy at 1,800 crores. In fact, we are now sitting on a total cash balance of almost 4,500 crores. The profit after tax for the quarter is 1,000 crores, which again, after a long time, we have hit the four-digit category from an operation standpoint. We had promised a series of metrics over the last 2 to 3 years that we'll be doing. And I think you'd be glad to know that we are by and large achieving most of them, be it on sales, PAT, cash flow, margins, and on the rental business. And we hope that we continue to sustain this in the quarters to come. Frankly, you must have seen that, while obviously during the course of the call, Akash will speak a lot about the Dahlias and about how spectacular a success it's been. But in all fairness, frankly, I wouldn't be lying to say that it sort of has also, surpassed our own targets and vision that we had for the first quarter after its launch. And we hope that this sustains. We have other products in the offering as well, which are outlined in the presentation. You may also have seen the notes to account that we have also made a provision of about 900 crores towards discharging certain tax liabilities under Vivad Se Vishwas. These pertain to the old SEZ tax issues that we had about almost 12 to 14 years back. And even though we have won those cases at every conceivable appeal level from CIT appeal to income tax tribunal, but given the fact that it would take at least maybe a decade more for it to be finally adjudicated in both the High Court and the Supreme Court levels, we just wanted to ensure that we future-proof our business from this residual uncertainty around that, and hence we have moved into to do that. This will extinguish in excess of 2,000 crores of our contingent liabilities in our books as well. Before I hand over to Sriram to speak about the rental business, I'd also take this opportunity to introduce our new CFO, Badal Bagri, who has joined us in December. Badal comes from an extremely checkered career with GE Capital, Airtel, Reliance, and we hope that he brings in extremely strong controls and extremely strong business awareness for him to take DLF on to even higher heights. Sriram, I request you to chip in with some words about the Rentco business.
Thank you, Ashok. So this is the first time we are changing the format slightly, where after Ashok gives the opening statement, I'll spend a little time on the rental businesses. And this has happened because when we speak of rental businesses, the first thing that comes to our mind is DCCDL, the subsidiary that is there along with GIC. But as we see the future and as we see now, the rental income on the DLF balance sheet also is continuing to increase. And therefore, we will talk a little about the rental business in totality. And so it will be DCCDL plus. So you please have to pardon me if the figures are not that very accurate to start with, but I promise you by the next quarter, these will be completely fine-tuned as the overall rental business. I'll first like to touch upon the vacancy level in offices and retail. Our vacancies now have come down to 7.2%, which in offices, which at the beginning of the year were at 9%. And the 7.2%, the vacancy in our non-SEZ portfolio are down to about 2% now, whereas the vacancy in the SEZ portfolio hovers around 12.5%. We are working quite hard in Q4 to see how we can bring it down to around 6.2%. Retail vacancy continues to be around 2% in the portfolio, which is really a function of the churn that happens in the portfolio and the leasing, and before one tenant vacates and the other comes in. The CapEx program on the development of new assets is going quite strongly. We have commenced construction on downtown Gurgaon phase 2, where we have 4.6 million on offices and 2 million of retail. The construction has commenced there. The construction of Downtown 4, which was the last building in phase 1, is getting completed. We expect the OC to come in this quarter. Tenant handovers have commenced, and the 2.1 million tower is now fully leased other than 65,000 square feet, which we hope to complete within the next 2 months. Downtown Chennai, Downtown 3, which is fully leased. We expect the OC anytime now, and the rental also to commence in about 4 to 5 months' time. Construction on Downtown 4 and 5 in Chennai, which is about 3.6 million, started in Q3 and is progressing well. The construction on the 3 malls which are in the DLF portfolio, which total up to 1.3 million, is moving.
I'm sorry, sir, you're not audible.
Hello, can you hear me now?
Yes, sir. Please go ahead.
Which was in the 2 malls in the Delhi NCR were a little delayed because of the grab and the stoppage of construction, but otherwise we are on complete track on that. The construction on Atrium Place is moving on track. Atrium Place, as you know, is a joint venture with DLF Holdings 2/3 equity and Hines US holding 1/3 equity. 2 million should get completed by early next quarter, and phase 2, which is 1.1 million, will be about 10 to 12 months after that. Our SEZ, the total stock that we had, which was vacant, was 2.3 million square feet, out of which we have applied for 2.2 million square feet for denotification. 1.9 million of that has been approved by the Board of Approvals. And out of this 1.9, 1 million has already been leased. On sustainability, we continue on our path to be the global leaders. We, as you know, have achieved LEED Platinum for all our operating buildings. We have got LEED Platinum 0 for water discharge for all our buildings. Both are sort of leaders in globally. And now we are working on LEED 0 for waste, where about 60% of the portfolio has got LEED 0 waste. And by 30th June, we plan to convert the entire thing, the entire portfolio to LEED 0 waste. We are working on our carbon neutrality, and sometime in the coming quarter or the quarter after that, we will make an announcement on when we believe we will be completely carbon neutral. ICRA and CRISIL, who rate our debt, ICRA has improved our rating from AA plus stable to AA positive a few weeks back. CRISIL is in the process of reassessing our rating, and their report should come out by probably February end. During the quarter, DCCDL sold its IT park in Kolkata which was a 1.2 million square feet asset. We sold it for 675 crores and we got cash of about 637 after adjusting for the security deposits and the net current assets. This is from my side. I will now hand over to.
We can now open for the Q&A.
Thank you very much. We will now begin the question and answer session. Participants connected on webcast may click on Ask a Question tab available on your screen. For participants joining through the audio bridge, to ask a question, you may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take our first question from the line of Praveen Chaudhary from Morgan Stanley. Please go ahead.
Thank you so much for taking my call, and congratulations for a phenomenal pre-sales quarter. I have two questions. The first question is related to the demand situation in Gurgaon. There has been a lot of market data points suggesting that there might be some over-exuberance in the last 12 months. So if you can update us a little bit on the Gurgaon market, whether it matters to you for your Dahlia project or not, but in general. And the second question was related to the investment property. It seems like there are a lot of completions going to happen. Just wanted to understand again, in terms of long-term target for that asset, will you monetize it? Would you divest it? Or would you continue to keep both the assets together as in DP and IP business together in the business? Thank you.
Talking the demand, please.
Okay, so as far as the demand is concerned, I feel that the markets in Gurgaon are now maturing, and Gurgaon is no more geography related purchase story anymore. It's agnostic to investments that are coming into Gurgaon are from all over the world and of course all over the country. So what is happening today, I will speak for DLF first, where a DLF product is now almost akin, like right now what people are doing is it's something which is being compared to what people generally like investing in stocks and the market and all. So a DLF product that way, with the liquidity it has and the appreciation that it is given people across the board, and Gurgaon markets that has already given that particular increase, is why it is being preferred. In fact, today price points, there's CRE, which is a data analysis company, has started to compare price points of Gurgaon to Dubai and London and all. See, we are not into all that speculation, but all I can say to you is that the way the infrastructure is being planned in Gurgaon, the proximity to the airport, most of the Fortune 500 companies, I mean, a very robust office business, leisure, hospitality, the best homes to live in. I think the quality of life that Gurgaon today gives in its entirety is something that is driving this growth. It is no more an investor's market. People want to come and live here. And of course, it has given a very strong rental returns to people who don't live here and who own properties here. So from all aspects, Gurgaon is something that I feel, contrary to what you are saying, is just about establishing itself after almost a long time. And I see this trend going forward, that's what I feel.
Yeah. And Praveen, I'm sorry, I didn't fully understand your second question, investment properties.
Yeah, I was asking, thank you so much. I was asking that, the DCCDL as well as your own business are both growing very well.
Yeah.
My question was that, is there a chance of monetizing those assets so you can use those money to higher returns? That was the question, actually.
No. So we remain, frankly, equally committed to both the businesses, the DevCo and the RentCo. And, frankly, neither us nor our partners, GIC, are in any hurry of any form, frankly, for the monetization exercise. As Shriram pointed out in his opening remarks, we have just begun the next, huge capex build-out cycle. And I think clearly we should at least wait for that its completion in the next 4 to 5 years before something of that sort happens. So at least right now we are staying committed on the operating piece of the business, and frankly there are no immediate plans on any monetization.
Operating and growth.
Operating and growth.
Great. If I can have. Thank you. And if I could have just follow up on last question from my side is Mumbai and Goa market where you are expected to launch some really marquee projects and we have been waiting for. Could you update us in terms of either timing or what is, if any, the delay, the reason for delay, and also how is the demand looking at this point in time? Thank you.
So the demand piece you can mention.
Just one more thing, Praveen, since you all work on numbers and not on emotions. Basically Gurgaon, if you see 15 months when 3 projects that we had to do, I'm talking about DLF right now, we did about 22,000 crores. And in the last 12 months, if you just see the Privana, Dahlia and the other stock that has been sold is about 24,000 crores. So if you see the kind of business Gurgaon, and that's just DLF's numbers. I'm sure if you just add up everybody else's, you will see the kind of numbers that Gurgaon is continuing to do. And these are hardcore money in the account. That is one. Then going back to Mumbai and Goa. Mumbai right now, I'm seeing a good kind of demand. Mumbai, I'm seeing the expectations also quite reasonable in terms of what we are looking at, what price points approximately. But overall, I think there is a good amount of excitement for a DLF product to come into Mumbai. Goa is one of its kind. It's a super luxury project in Goa, as you all know, and that has its own set of demand. So overall, right now, so far, so good.
And again, Praveen, to your point, there's no delay happening in Mumbai or Goa, but yes, those are newer geographies for us from an approval standpoint, and the approval cycles are underway in both the places. Hopefully, once the approval cycles complete, we should be in a position to launch. Right now, the way it looks Mumbai should launch first, and Goa maybe after some time. Thank you.
That is super clear. And once again, your products are exceptional. So keep it up and congratulations.
Thank you.
Thank you. I now request Pritesh Sheth from Axis Capital to please accept the prompt on his screen. Pritesh, I request you to turn on your webcam, unmute yourself and go ahead with your questions, please.
Yeah, am I audible?
Yes.
Yes, Pritesh.
Yes. So congrats on great performance. First, I just am trying to understand the mix of demand that we've got in the areas. How much is incumbent population from NCR, India, NRIs, whatever insights you can provide us, because these numbers are like beyond our expectations. So just trying to understand, where it has come from.
Yeah, Pritesh, so it's the golf links community first, in that order I'm going, then NCR, then NRIs, and then rest of the country. NRIs have contributed to about 12% of our sales in Dahlias. About 50% has been the community, friends and family, and people who live there, who've been referred, who are there as tenants, their references, and the rest. I am seeing a good traction coming from the other metros as well as tier 2 cities that I saw. In fact, I mentioned in one of the calls, even for Camellias. So that's the kind of. So you see, if you recall in one of the conversations, I'd also mentioned that every product that DLF is bringing in today, we are doing a global launch, you know. So we are not only geography specific as far as our launch is concerned, but I think post the approvals and all, then we go ahead and kind of go seek the market everywhere else. But we are in continuous conversations with our customers all over the world and in India. And I think that is what has given us this first fillip.
Got it. Interesting. Just two more again on Dahlias. One, on the pricing side, while whatever we have sold is at 65,000 per square feet roughly on sellable, and whatever inventory that is left is right now priced at 85,000 per square feet. Are we like, since we are going to phase it out, are we building some bit of price increase in those numbers, or whatever is left is anyways like high ticket size, and the base price itself is was always planned to be higher than the initial units. So
Yeah. I'll
So Pritesh, just one mathematical, correction before I hand it to Akash. 65 is the average price that we have obtained in the first 173 apartments.
yes.
We have exited more at a mid 70s price point right now.
Okay.
So really the delta is from mid 70s to mid 80s and not from 65 to 85 really, in that sense. And B, of course, the way the pricing grid and the attributes of each apartment are, virtually no two apartments have the same price really, And so it's a very complicated grid that Akash has created, which only he understands. And hence I will head over to him.
Yeah. So basically, how this is working is that this was the first price, and of course there was a community offer and all that, which going forward you will see that also being withdrawn, and the inventory available right now, there was a certain mid floor and low. So obviously the price points for the others as they come along will be at higher price points. We have achieved some benchmark pricing here as well, which are very, very encouraging. But at this point of time, I don't want to just give you a number for the sake of it, but extremely encouraging to see what our first phase of price exits have been. So have you been able to answer that question, Pritesh?
Yeah, absolutely clear. And how are you planning to phase it out now, the balance inventory? So we'll have some bit of sales. Yeah.
Yeah. Right now, I think we're taking a very
Pause.
short breather, very short. But I think we will get up because sometime around mid this year, we will be doing our experience center. That will be another show and tell. That's going to be another experience that people will go through. And of course, before that, I think just give us this little time to just we kind of in a way, I love to say celebration, but recalibration is what I can say. I mean, we are not, so that's where we are right now. But I think, see, again, a product like this is going to be hard to beat, and I say this with utmost humility that I don't think you've seen a product like this. Also, a 4.5 billion US dollar launch for one condo in the world. I don't think there is any comparison. But also, it's a very far. I mean, as an Indian, I think I'm extremely proud to see a product like this unveil in our country. So there will be enough coming in. And again, as one more last thing I'd like to say to you is that, see, with Dahlias, we're not in a hurry to sell off everything. If you remember, I'd given you a 4-year sales plan earlier, right?
Yeah.
So in super luxury, this is not like say a Privana or a Floors or anything else that I'd like to do first day, first show. That those numbers itself have been large, but the per unit cost here, I'd rather you benchmark our success with the per unit sale cost rather than the inventory cost. There you will get far more confidence, and you will see those numbers getting better with every sale.
Amazing. Just one last from my end on the rental side. Um, I know like you want us to look at combined, but just wanted to get a sense of plans at the DLF side of commercial. Since we are almost done with the 3 malls and Atrium Place, what's next for DLF side of commercial business? Like, will we take up a few more projects there, or probably right now the focus would be on the 2 downtowns and then move on to the Cyber City 2, which is always planned for? Yeah.
So, Pritesh, obviously you are right that we are in the next 12 months focusing on completing the 3 plazas and Atrium Place, and on the Cyber City side, the 2 downtowns. But clearly, I think Mr. Khattar and the team is working on the uh, next sequence of options on the DLF side that we could potentially commence construction on. And Shriram, if you would want to.
Yeah, so there is a fair amount of potential that we have, and we are assessing the potential in New Gurgaon and Hyderabad to see what we can do there. I think by the time we have the next analyst call after the 12 months are over, we will have far more clarity on that. But clearly, the growth rate of rental assets in the books of DLF will be higher than the growth rate of the rental assets in DCCDL, primarily because DCCDL has a very large base compared to that of DLF.
Got it. That's very helpful. That's all from my side, and all the best. I mean, you're doing amazing work. Yeah, thank you.
Thank you, sir.
Thank you. I now request Amit Goela to please accept the prompt on his screen. Amit, kindly turn on your webcam, unmute yourself, and go ahead with your questions, please.
Yes. Yeah, hi, sir. Congratulations on a great set of numbers. Sir, I've got 2 questions. One is for Shriram. Shriram, on DCDL, if you look at it, your debt to EBITDA has been consistently coming down, whereas your rentals have gone up. Like it's now down from 5.6 to 3.2, 3.3. Now you've got almost 12 million square feet coming up for expansion. So do you think the same trajectory will continue, or there can be some changes there?
Well, I think the trajectory will by and large continue, but we have started discussing with the shareholders that having come to a figure of between 3.5, should we go down further or should we look at using the cash generation for future expansion? I think that is still in the melting pot, and we are working on what to do further. We realize that just reducing debt for the sake of reducing debt is not a good idea, especially for an annuity company. And we are sort of focusing on it. Do we have a ready answer? Not yet, but in the next few months we will.
Thanks, Shriram. Tyagiji, I've got one more question for you.
Sir.
Sir, excluding Dahlias, you've got almost 30,000 crores of revenues to be booked now going forward. Like, so how do you see this panning out? Because this should throw up a lot of cash also as the revenues keep getting. One is the cash from the sales, which is happening upfront, then the actual cash coming from the business sublines.
So, Amitji, the issue is that across Arbor, the 2 Privanas that we have launched, now Dahlias, and going forward the launches that we will. A lot of cash, you are correct, will keep on accumulating in the system. I mean, frankly, the way it's structured, a large chunk of it will continue to be escrowed in the 70% RERA account. As you may have seen, I think in December, it's 7,000 crores is escrowed in the RERA account. And I think really, Amitji, by the time our natural completion cycle of the high rises that we have launched, which is Arbor onwards, which we expect in about 27 odd months from now. Once that cycle begins completion, you will see hopefully a far robust jump in both the revenues booked as well as the cash flows unlocked from RERA, in that sense. So the next 2 years, frankly, would be more calibrated. We'll still generate a lot of cash, but a lot of it could still stay trapped in the RERA account. Hopefully, from early 27, 28 onwards, we expect the virtuous cycle of the high-rise completions to come into play. And that's where, you will really see serious amounts of both cash and margins being recognized in the books, sir.
Okay, thank you, sir. Sir, just one last question. Sir, in terms of like, given the kind of size which has been acquired, like now construction also becomes very critical. So, sir, like what kind of square foot construction you're like in terms of million square feet or like you're looking at an annual basis? And are you looking to hasten up the process so that like the whole delivery cycle shortens a little bit like?
So I think including the two downtowns, that Shriram spoke about, I think our total square footage under construction is now approaching 40 million square feet. We believe that with the current bandwidth that we have, I think a number of between 40 to 50 is what I think we should be efficient at. A number beyond that could begin testing us, really. So, but again, I think to a large degree, it's about internal bandwidth, Amitji, and it's about the contracting ecosystem, which we have, I mean, you have heard us earlier also on the constraints that are there. We continue to, sort of negotiate them on a project by project basis. But I think really, if you were to ask us, the one serious constraint to a growth beyond this number would be the contracting ecosystem. But I think we can comfortably handle between up to 40 to 50 million square feet of construction at a certain degree of, on a simultaneous basis.
Okay, okay. Congratulations again, sir. Thank you so much.
Thank you, Amit.
Thanks, Shriram. Thank you.
Thank you, Amit.
Yeah.
Thank you. We'll take our next question from the line of Abhinav Sinha from Jefferies. Please go ahead.
Hi, and congrats to the whole team on strong set of numbers. So just quickly on the pipeline on figure 7, slide number 7, launch calendar. So this year we now have Mumbai to come and Privana phase 3 is next year, right?
So देखिए ऐसा है अभिनव that 3 projects, Goa, Mumbai, and Privana phase 3 are all under the approval process. Our current reading of it is that it looks that the Mumbai approval should come hopefully in the next few weeks, and we should be able to launch it. And the other 2 could overflow into the next quarter. But again, while we have to report on a quarterly basis, this is not unfortunately a business which is executed on a quarterly basis. So हमारे 3 projects are under the approval cycle, and we are hopeful that at least one of them should be able to make it to the finishing line within this quarter.
Sir, can you detail the Mumbai product now or still too soon?
Okay.
No, right now, let the approvals come through, but we've already it's a premium plus product. It's going to be, we're going to be bringing the DLF lifestyle there. It's going to have your the DLF kind of clubhouse and the services available, and it's 1100 to 1500 odd. So basically, I think right now, post the approval process, I think I'll be able to detail it further. But the overall basic stuff that I'd mentioned, I mean, what we'd mentioned earlier also stays, and it's going to be a good product for that TG. So something which is efficiently done. So yeah, it's going to be a nice product.
Okay.
Sure. And Tyagi sir, last question on the cash, the tax settlements that we have done.
जी.
There is no cash impact, right, on a net basis?
नहीं, there will be a cash impact, but it has not happened in Q3. इसमें क्या होता है? There's a process to विवाद से विश्वास, which is that you apply for the settlement. They then approve the settlement. Once they approve, then within 15 days you have to deposit cash. So as we speak, so far of the 900 crores, about 300 crores is the amount that has been accepted by the department and which is in the process of getting paid out. The balance quantum should definitely happen this quarter, but hasn't happened yet.
Okay, so the whole 900 will be impacted in the fourth quarter, right?
Q4 में you will see a 900 crores cash outflow. Absolutely.
And sir, what your liability used to be there against the DCCDL SEZs, it's now over after this thing, right?
So ऐसा है कि against the SEZ of DCCDL, with this hopefully our entire liability stands extinguished.
Okay, great, and all the best to the team.
Thank you.
Thank you. I now request Parvez Kazi from Nuvama to accept the prompt on the screen. Parvez, please turn on your webcam, unmute yourself and go ahead with your questions, please. Parvez, can you unmute yourself, please? Yes.
Am I audible now?
Yes, please go ahead.
Yeah. Thanks for taking my question and congratulations for a great performance in Dahlias. So couple of questions from my side. I mean, Tyagi sir said that we expect 2 out of 3 projects maybe to spill over to FY26. I think we had also mentioned that we'll probably see the launch of the project on the Irio land that we had bought in FY26. So apart from these 3 projects, what could be the potential launch pipeline that we can see in FY26?
Parvez bhai, देखो, we have a tradition that we speak about the pipeline for the fiscal year in the annual accounts closing call जो करते हैं हम लोग मई में. So let that tradition stay. Right now, but I think I mean, look, the good news is that courtesy our transparency on the sales pipeline, all of you know the projects that we are working on, be it Sector 61, the Ideal Land, be it, a couple of other projects in DLF City, be it the next phase of Privana, the next grounds in Chandigarh, Mumbai. So I think clearly some of these will eventually, fold into 25, 26 fiscal. But I'd say that we are in the final throes of our planning exercise for that. So I'd request that, just hold your horses till the end of Q4, and we should be able to give you far more greater clarity. But there'll be no surprisingly new project. It will be a part of this basket that you are well aware of.
Sure, sir. The second question is our thought process towards future business development. I mean, considering the kind of strong cash flow that we are seeing, do we have plans to, let's say, buy more land in Gurgaon or maybe cities other than Gurgaon? What is our thought process there?
So देखिए परवेज, ऐसा है कि in all fairness, yes, we have cash, but as I explained to Amit Goyla ji, as we speak, at least right now, a lot of that cash is still, trapped. And you know that even though we are sitting on a huge net cash surplus situation, we still have a gross debt. So I think our short-term goal is also to actually get rid of that monkey off our backs as well. But clearly, if it's an interesting and a multiplicative land parcel that we get, like the one that we procured last year, we definitely be more than willing to enter into discussions on that. The second point also you must appreciate is that unlike some of our other peers, there is enough land banks that we have both in Gurgaon, Delhi, Chandigarh, at least these 3. The Mumbai project that we are currently launching, the first 900,000 square feet, frankly, the way we are accumulating the entire area, I think that number itself should hopefully over time cross a significantly higher number than that. And that will keep us busy for maybe the next few years in Mumbai. So I think we have enough on the ground. But if we get something truly interesting or truly, cost effective, definitely you are right. We have the balance sheet now to be able to go and try those. But obviously this is also a time when the sellers have also become, more aggressive in terms of the price point that they're looking for. In many cases, it may not always make sense.
Sure, sir. And lastly, a question for Sriram sir. Would be great if you could give your estimate of the kind of rental income in FY26.
So FY26, the rental income will be about 6,300 to 6,315 DCCDL and about 12 odd hundred in DLF.
Exit run rate. Exit run rate.
No, we're saying for the year.
Sure, sir. Thanks and all the best for future.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, before we take the next question, I would like to remind you, participants connected on webcast may click on Ask a Question tab available on the screen. Participants joining through the audio bridge may please press star and 1 to ask a question. I now request Samir Jasuja from Prop Equity to please accept the prompt on the screen. Samir, please turn on your webcam, unmute yourself and go ahead with your questions, please. Samir, can you unmute yourself, please?
Yeah, sure. Hi, congratulations everybody on the fantastic results. I just wanted a few clarity on the cost of construction. It go a long way that, for example, if you're selling dahlias at say 80,000 rupees a square foot, and if you're selling privana at say 20,000 rupees a square foot, there would be some value addition in terms of cost that you would be incurring higher on the dahlias project. It will go a long way for the customer to understand and the analyst to understand as to what the component or the percentage of cost of construction is to the sale value of the asset. And if that, Shriram sir can also answer on the commercial side. Because we have less visibility, we keep on getting asked questions, why is the cost of construction of DLF much higher than their peers?
Okay. So, Samir, frankly, I don't have an answer for the last part of your question as to why is our cost higher, except a factual acceptance that yes, our cost is higher in that sense. So if you see, if you check out our filings on the Privana piece, I think our construction cost is ballpark in the range of 8,000 odd rupees a square foot, 8,500 on a sale price of about 20,000, which broadly is a 40% ratio. In Dahlias, frankly, we are expecting a construction cost to be in the range of ballpark 25 to 28 to 30% of our total sale price, because the construction cost, and in all fairness, Samir, I have to concede that we are in the process of fully pulling together the entire construction budget for Dahlias, because it's not just the buildings that we are making, but also the infrastructure that we are creating along the Dahlias, which is where which will take some more time for us to fully understand the cost implications of it. But we expect that say in the Privana, the cost to revenue ratio would be ballpark in the 40% piece, and in the case of Dahlias, I think we should be hopefully not more than the mid-20s.
So that would mean about 15 to 20,000 rupees a foot on dahlias?
Sir, sab mila ke, I mean, we don't know, including infrastructure, yes, including infrastructure, the numbers could approach those things. But frankly, as I said, I think we are maybe a quarter away from having a complete grip on these numbers. But I wouldn't be surprised, if the number does enter those ranges that you're talking about.
And sir, the same question to Shriram sir with respect to being LEED certified and all that. What is the real cost of construction that happens? And this, sorry, was on carpet area or on super area, sir?
Super. So I'm talking
This is
super
on
area.
GLA.
Saleable area.
So Samir, on the rental businesses, say Block 4 DLF, our downtown in Gurgaon, our cost of construction is about 6,300 rupees a square foot on GLA. Now, this is about 2 years before Block 5, 6, and 7 and 8 come into play. And therefore, if you add the annual inflation to it, and then you add the additional cost of the structure because of the change in the building codes that are likely to come, we are already planning for that. I would guess our cost will go up to about 8,200 rupees a square foot.
This is for office areas, sir?
Office areas.
And retail GLA is 50%. So will that be 12,000?
No. In offices, the ratio is 1:1.43.
Right.
In retail, it is 50%. And in retail, because the level of finishes and common areas have to be done very differently, and it's not a bare shell in that sense, that cost will be in the ballpark of 10,000 to 10,200 rupees a square foot.
Got it. Thank you so much, sir.
Thank you. I now request Puneet Gulati from HSBC to please accept the prompt on the screen. Puneet? Yes. Puneet, you may please unmute yourself and go ahead with your questions.
Okay, great. Yeah, thank you so much. My first question is, first of all, congratulations on Dahlias. Extremely well done. On Dahlias to start with, have you offered everything, the entire 420 units to customers, or was only a certain part of the inventory initially offered and more will be opened up later?
No, so thanks. Delia, as far as the inventory is concerned, most of it was offered. Some basically higher floors, and they have different price points, and therefore they come in different phases. But anybody who's wanting to pick up anything at a future price point is more than welcome. But right now, it was I mean, we did not hold back on inventory. We let people choose, and the price points were according to the what they chose. And of course, I repeat, every apartment in Dahlias is differently priced from the other.
Understood. That's helpful. Secondly, on the the office portfolio DCCDL, there was a sale of Kolkata asset. What drove this sale of asset? I mean, you're not short in cash. Any thoughts there?
If you look at the total rental portfolio of DLF, it is if you look at the offices portfolio, it's about 44 million square feet. The Calcutta 2 assets were totaling 2.3 million in a city where there has been incremental leasing of 1 million, which is expected this year, compared to a country's leasing of about 80 million.
Yeah.
And we also saw that while the rentals were going up, whilst they were going on in absolute terms, relatively, they were not making any dent on the P&L or the balance sheet. We also realized that if we have to put our management time and if we have to use our skill sets, we would rather expand in geographies which give us rentals which are 3-4 times the rental that we were expecting in Kolkata. So the shareholders discussed this about 8-9 months back, and then decided that if we get a sort of a benchmark price, we should go ahead. We were able to achieve it, and therefore we disposed that asset.
Understood. That's very clear. Thank you so much. And on the on the tax side, should we think that 900 crore full hit will come in Q4 itself, or could there be more? You mentioned the number of 3,000 to start with.
No. So the book hit has been taken in Q3. So there's no book hit has been booked in the Q3. The cash outflow will happen in Q4. And no, it's a finite number of this 900 odd crores that is there. So there's no probability of it increasing on account of Vivad Se Vishwas right now.
Okay, so and that number is close, because even in this quarter you recorded only 16 crore of cash outflow in DLF.
Cash outflow Q4 में आएगा. Cash outflow Q4 में आएगा.
And post that, should we think of tax outflows in similar ranges, or would you be going back to 25% of PBT as cash outflows?
No, so I think we are possibly a couple of years away from hitting that full throttle cash outflow because of certain accumulated losses and all that we still have in our books. But I think eventually, obviously, at some stage, the cash outflow on tax should be equal to the book outflow on tax. But I think we are hopefully about 2 years away from that situation.
Understood. And lastly, in your planned projects, in this time in the slide you've excluded some projects, the 5.5 on super luxury gone down to 4.5, and similarly on the luxury 3.8 now.
Because the Goa piece, we have just moved to the next quarter. I mean, in that sense, so to the next fiscal. So that's the reason.
Okay, so Goa was super luxury, so that's out, and 5.8 luxury is down to 3.8. So what has moved out there?
Because basically, again, as we mentioned in the call earlier, the Privana phase 3, which frankly I'm not ruling out. Right now, we have also conservatively planned it for the next fiscal, given the state of the approvals right now.
Understood. That's helpful. And lastly, I think from Akash, I think this is a major benchmark you have achieved. What is the next aspirational benchmark for you in terms of product and sales?
I was just told before the call by Mr. Tyagi and Mr. Khattar to be don't celebrate right now. So I am still in a very muted mode. I don't know what to say to you, but extremely grateful for the support that we've got. I think it's a validation of what DLF Super Luxury does. And again, it's a validation of the people who've been through the experience and have supported us, and the word of mouth thing. So right now, I think what we've done right now is the first phase, and I'd like to continue this run, and it's just that we're taking a very short breather to just to recalibrate and re-strategize as to how we want to bring in the rest, because as we had mentioned earlier, also that initially we thought there will be, we plan to bring only a 10% stock in, but as you see, it's about 41 odd percent. So right now, without compromising on the valuation and the price points, I think the focus will be that, and also we will kind of now expedite the entire show and tell experience. But mostly the endorsement has come in from people within, and I think I'd like to continue to invest in them.
Understood. That's very helpful. Thank you so much and all the best.
Thank you. Thank you so much.
Thank you. I now request Kunal Lakhan from CLSA to accept the prompt on his screen. Kunal, you may please unmute yourself and go ahead with your questions.
Yeah, hi. Am I audible?
Yes, sir.
Yes.
Yeah. Hi. Good evening, everyone. So my first question was on your residual portfolio. If you look at DLF 5, there is still additional area of about 20 million square feet odd. And I think last quarter you had mentioned about that going forward DLF 5 would be say Camellias Plus, or even like similar to the Alias kind of a kind of vision you have for the rest of the portfolio. In that context, how should we look at the monetization timeline, and how would you bring this product to the market, and what is the timeline for this?
So in all fairness, I think as Akash mentioned earlier in the call, Dahlia's total monetization timeline is in the 3 years plus range, really, frankly. And depending the pace at which it monetizes, obviously you're right. We have both the plans as well as the area identified very clearly on what will be the successor to Dahlia's, in that sense. We'll just have to keep on finding out flower names which end with LIA, but I'm sure there are enough available still. And so I think that will happen. But at least given that we are only a quarter from the Dahlia's launch, I think your question, while strategic, may still be a trifle, premature. But obviously, as we sort of, start saturating the Dahlias, the next phase, we are, I think, prepared for what the next phase would be, and the phase after that, etc. And I think you are right that ballpark 20 odd million square feet of development area still is very clearly available in DLF 5, and I think it will take the time that it will. But I mean, again, giving that super luxury, these things obviously will also sell at a certain pace over time, in that sense, and that's the way it will be.
Understood, sir. My second question was on the overall segmentation, pertaining to us as well as the overall market, right? So when you look at, say, the Alias, right, almost like, say, 65-70 crore kind of ticket sizes. And then there is Privana, which is in the range of, say, 7 to 8 crore kind of ticket sizes. But there's nothing in between, like, between 8 crores to, say, 60-70 crores. That segment of the market, do we intend to cater to? Is there enough opportunity over there? And I mean, what's the demand situation there, and how do we plan to cater to that?
No, so you will see there is a segment that we are planning between this as well, and that you will see in the coming years, especially next year onwards. You will see all of that coming into the market for sure. We'd like to cater to this entire spectrum, and so yeah, I mean, in fact, that is something that is planned already. And previously, what you had mentioned about Dahlias and the DLF 5 and all that, I think that one kind of product benchmark or the geography in specific has been established for the super luxury business, and I think that's what we'd like to continue, because one, the expectations; second, the kind of infrastructure work; third, the other things that we're kind of putting it together there. I think that's a story that will be almost akin to what the Central Park in America is. I mean, if you see that, I mean, that's the only analogy I can use, and that's how it's going to be.
Sure, sure. And my last question was on any update on the REIT side. Where we are? What are the partners thinking on those lines?
So, I mean, currently, basis our discussion with our partners, there is, as you mentioned earlier in the call, no immediate plans of any monetization exercise on the cybersecurity front. In fact, we've just now started the mega capex build out in both the downtowns of Gurgaon and Chennai. And frankly, only once this cycle completes, I think would be the right time. But again, this is as we have maintained in the past also, that the triggering off of the monetization of cybersecurity will be a decision to some degree, which will need to be initiated by our partners, because we clearly have no desire for diluting our stake. And we'll clearly, we are duty bound to honor their request as and when it happens. But I don't foresee, that happening for the next few years.
Okay, well understood, sir. Thanks and congratulations for the great quarter and all the best, sir.
Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, we'll take that as the last question for today. I now hand the call.
Sorry to interrupt. I would like to make one clarification. I think Parvez asked a question of FY26 rentals, and I told him in DLF the rentals will be 1,000 to 1,200. I would stand corrected. They are 800. 1,000 to 1,200 was for the following year, and therefore I erred on that. My apologies.
Thank you, sir. I now hand over the call to Mr. Ashok Tyagi for closing comments. Over to you, sir.
Thank you so much. And I think today we truly had a very, very engaging call. And, hopefully we continue to stay focused on the path that we have chosen. I'd just like to have a sort of, a moderating tone, which is that while obviously we are all very buoyed by the Dahlia sales, I think the metric that should truly excite us is not the 11,800 crores of the pre-sales, but the fact that 8,000 plus crores of pre-margin has been booked on account of the Dahlia sales. Because I do believe that at some stage the industry and the analysts following the industry have to come out of this pre-sales, sort of mindset and focus on the two metrics which matter, which is margins and cash flow. And I think we are very clear that is the sort of, direction on which we'll continue driving our own DevCo. And hopefully that's how we will. Thank you so much again. And hopefully by the time we come back to you with our annual results in May, we should have some further developments to report. Thank you once again.
Thank you, members of the management team. On behalf of DLF Limited, that concludes this conference. Thank you for joining us, and you may now exit the meeting.
Thank you, sir.